Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, September 10th, and tomorrow and Thursday we have 2 days of inflation data. So right now, as I'm starting to record this, we have the presidential debate. Then tomorrow morning in pre-market we have CPI, and then Thursday we have PPI. So the next 2 days really could have a lot of volatility. And today, SPY did open with a gap up, and we opened just underneath the 50-day moving average, and then from there we dropped back underneath the 1-hour 200 moving average and into the red. And the second half of the day we came right back up, just a little bit above this up gap that we saw from Monday, and we brought it all the way back up to almost about where we opened. So where we opened today right here to where we closed was pretty flat, and we closed just underneath the 50-day moving average. So if you did watch last night's video, I just put a guess out there that we would close around 548, and we closed at 548.79. And SPX, same thing over here. We opened with a gap up, and the 50-day moving average was a little bit higher over here, and we got pulled back down underneath the 1-hour 200 moving average. We got down into the red here, about 2/3 of the way down the implied move, and then the second half of the day we saw a low volume grind back up to pretty much where we opened the day. SPY did close up 0.44%, SPX closed up 0.45%, VIX closed down 2%, and in both we did stay completely within the implied move. And today, even though we did have an up day in the S&P 500, from where we opened to where we closed was flat. And QQQ did open here as well with a gap up. We dropped down into the red with the rest of the market today, and then halfway through the day, we came all the way back up to the top of the implied move. So that's a decent sized move. The implied move had it at 1.06%, and we almost got to the top of that. So we're seeing the kind of volatility you might expect at 23, and QQQ did close up 0.92%. It was the biggest winner of the day today. VXN closed down 1.25 to take it just under 24, and we did stay completely within the implied move today. And then IWM actually had a red day. We did open IWM flat. From there, we did drop down to the 4-hour 200 moving average. You can see we had a couple candles here trying to catch that level, but we lost it. We dropped down all the way to the bottom of the implied move right here to the penny. We filled the rest of this up gap that we had when we had that week with that big drop. We did trade back up, and then we had that up gap. We recently filled most of that gap, left a little bit open. Today we closed that. And then once we hit the bottom of the implied move to the penny, this is why I do call it a level on the day, right there we did pull right back up to close right underneath the 35 EMA. So look at that 35 EMA. Since we gapped down underneath it at the top of last week, that 35 EMA has been an absolutely consistent resistance level. Still underneath it. And today in IWM, if you did sell bull put spreads, so 205 would be the strike you'd sell, 204 would be the strike you buy, then when we swung back up, those would have closed at 100% profit. I did not do that today, but it just goes to show that if you stay pretty mechanical, if you know which strike you're going to play, and you just have those orders ready to fill when we do drop to it, more often than not, you're going to be winning that trade. So that 205 strike was the perfect pick. IWM did close flat, down 0.08%. And you could see from where we opened slightly in the green, and we closed slightly in the red. So day over day flat and intraday flat, even though we did see a 1.22% move within the day itself. And then RVX did close up 1.7%, and we did stay completely within the implied move here. And then DIA also had a red day today. We did open right here. We did open with a pop up to the 30-minute 200 moving average. From there, we dropped down into the red almost, I'd say that was about 3/4 of the way down the trading range. So we did take it down to 405, and I did have the bottom of the trading range at 404. So this level right here, that 1 hour 200 moving average, we bounced back up. We still closed red, but we closed down just 0.19%. And DIA had the biggest drop from where we opened. We opened right here near the 30-minute 200 moving average, and we closed right here. So it had the biggest intraday drop from open to close. DIA closed down 0.19%, and we stayed within the trading range today, and we did see that 30-minute 200 moving average as resistance, which does tend to happen once that 35 EMA crosses underneath the 30-minute 200 moving average. So overall, price action today was slow and predictable, but tomorrow we have CPI and PPI on Thursday, so that all could change. So ES right now is down 0.51%, Nasdaq futures down 0.66%, so I'm not sure what they said at that presidential debate, but obviously futures don't like it. All right, enough about today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you don't understand something. And don't forget about that thank you button if you want to give back to my channel. Alright, so starting in SPY tomorrow, the implied move is between 542 and 555, and that is from options. The 30-day average volatility is just a little bit wider, and I didn't put it in there because the next day's is wider than the 30-day average. So we're going to use that 541 to 556. And the 35 EMA on the 30-minute time frame is just underneath us right here. And then the first level to the upside is going to be this 50-day moving average. The momentum there is completely flat, and we're heading into high volatility economic data, or rather data that has the ability to move the market. We need something to give us direction here. We have completely flat 50-day moving average, completely flat 1 hour 200 moving average. And since Monday, we've just kind of been chopping around underneath and between those levels. So 50-day moving average is the first level to the upside. Right now, futures are down 0.53%. So really, we could be underneath the 1 hour 200 moving average and the 35 EMA as well. But as it stands, as we closed today, we do have that 50-day moving average right above us. If we get above that, then the top of the implied move is at 555, and we also have that downward facing 30-minute 200 moving average right there, right at the top. And then the implied move for Friday's contract is 556. So the way I would play that is if we did get near the top of the implied move here at 555, then I would be looking to 556, but on tomorrow's contract, not on Friday's, to sell spreads at that level. And that is how I have been playing it. And then to the downside, 1 hour 200 moving average, 35 EMA, and if those levels don't hold, and if we do open underneath that, and that turns to resistance, then 542 is the bottom of the implied move. 541 is the bottom of the implied move on Friday's contract, and same thing here. If we take a really big drop tomorrow and we get near the bottom of the implied move, then I would be looking to sell 541 spreads on tomorrow's contract. That is within the gap right here. That is from Monday's open, and the bottom of that gap is right about 540.5. And then underneath all of that, we do have the 4-hour 200 moving average, and ironically enough, the PCI and CPI gap from last month. That is definitely an interesting level to keep an eye on. And then just looking at all of this from a step back again, we do have upward momentum underneath us and downward and flat in the middle here. So if it wasn't for CPI and PPI tomorrow, I would think that we would stay pretty flat here. But a lot of that is definitely going to be determined by how the market interprets the inflation data tomorrow. So that is SPY, and then SPX. This is where I will be tomorrow, and SPX, the implied move is between 54.35 and 55.55, and that is from options. The 30-day average is just a little bit wider, and I didn't add it in there. It is 54.30 to 55.65, and then the implied move on Friday's contract, 54.20 to 55.70. And to the upside, we do have that 50-day moving average. It's not quite as close as in SPY, so keep an eye on if you're trading SPY and we get above the 50-day moving average, come over to SPX and make sure that we're actually above the 50-day moving average. And then above that, the top of the implied move is 55.55, and that's where the 30-minute 200 moving average is. That 30-minute 200 moving average has a huge probability of being resistance if we bounce to that level. It always does when we have that 35 EMA underneath here. And you could see if we zoom out just a little bit, the last time we had the cross down back here, we would drop and then test that 30-minute 200 moving average, and it was resistance here. We would drop again, come back up to the 30-minute 200 moving average, resistance, and then not until we got that cross back up did we see the full rally. So keep an eye on that 30-minute 200 moving average at the very top of the implied move. And then of course the 35 EMA, once it does cross back above, that's when we go long again. And then let me get recentered here. And then to the downside, we have the 1-hour 200 moving average that is facing downwards. It looks flat, but it's tilting down a little bit. And then underneath that, we do have the 35 EMA on the day right here. Right now, we do have futures down 0.51%. So let's measure that out. And where would that take us? So 0.51% is right here. That would take us underneath the 35 EMA, underneath the 1-hour 200 moving average. So those would be to the upside if we do open anywhere near where futures are trading. So be aware of that. So if we do come back up and see those levels, they could be resistance. And if they don't hold, if we break down, then 54.35 is the bottom of the implied move. We do have a little support right here at 54.45. So $10 above the bottom of the implied move, and then 54.20 is the bottom of the implied move on Friday's contract. So if we do drop tomorrow, get near this level, then I would be looking to 54.20. And then that would take us to this gap right here, the bull gap that we opened the week with, and the top of that gap is just underneath the implied move for tomorrow. The bottom of the gap is at 44.08. And underneath that, the 4-hour 200 moving average. And again, here that momentum is all over the place, and we have downward, flat, flat, upward. So if inflation data was not a variable for tomorrow, I would think that we stay between these levels for a little while until we get a little bit more of the time frames on the same page. And then QQQ, the implied move over here is, I didn't even put it in, so give me 1 second. There it is, like magic. All right, so the implied move tomorrow in QQQ is between 452 and 465, and that is from options. 30-day average volatility is a little bit wider, and that is between 451 and 466, so $1 wider. And then the implied move for Friday is between 450 and 467. And right now, NQ futures are down 0.7%, So I'm going to measure that out and let's see where that would take us at open. So 0.7% would take us pretty much right to the 35 EMA on the 30-minute time frame. So that right there could scoop us up right off the bat. And then let's look to the upside, the 4-hour 200 moving average and the 1-hour 200 moving average still pointing down. That is definitely an area of interest. Where they cross could be a big resistance, but if we do get above that 465, 467 on Friday's contract, and then that downward facing 30-minute 200 moving average, downward facing 50-day moving average. So momentum to the upside, definitely leaning bearish. And I also just wanted to add that this 4-hour 200 moving average and the 1 hour, that cross right there would be another bearish signal added on to the downward momentum of the moving averages. So definitely have some pressure to the upside. And then underneath us, 35 EMA. Let's go ahead and put that in. And projected outward, that basically stays completely in the red, making me think that we see a red day tomorrow. It doesn't even cross into the green. And then if we do break that, the bottom of the implied move is at 452. We do have a little bit of a channel right here. We've been making higher highs and higher lows. And this definitely could be a bear flag right here, a skinny little bear flag. And so keep an eye on that channel. That looks to be right around where that 35 EMA is as well. And where did I leave off? So 452 bottom of the implied move, 450 bottom of the implied move on Friday's contract. We've got that up gap from Monday's open, and underneath all of that, the weekly 35 EMA. And every night I've been going over about how important this weekly 35 EMA is. If we do break it, let's go check on that 5-year 1 week time frame right here. So 35 EMA has defined the uptrend since the bottom of January of 23. So once we got back above that 35 EMA, the red line, then we rallied, and then when we came back down, we bounced. Rallied, came back down, bounced. Rallied, came back down, and this was the biggest breakdown here. We actually got quite far underneath the 35 EMA, and we actually opened the week at the bottom of the candle and then pulled back up for one more bounce. So that 35 EMA underneath the trading range is super important. So let's go back to the 30-minute time frame, and that is right here. I don't want to say chaotic, but the moving averages are all saying something different. We do still have some bullish momentum underneath us, but above us, we are definitely getting some pressure. So definitely keep an eye on that. And then IWM. The implied move for tomorrow is between 204 and 212, and that is from options. The 30-day average volatility actually lines right up with that, 204 to 212, and then 203 to 213 on Friday's contract. And to the upside, the very first level to look for is going to be this 35 EMA. Ever since we gapped down last Monday, that level has kept us down. And today we actually closed right at that level. So directly above us, the 35 EMA. I don't have Russell futures right here, but if they're anything like ES or NQ, then we are probably underneath the 4-hour as well at open. So that could be a level to the upside to watch as well. And that is still facing upward, so it definitely could hold as support at this level. All right, so if we get above that 35 EMA, then the next level to look for is going to be 211. That 211 is really important. If we go to the 5-year chart and the 1 week candle, 211 was our support after the COVID rally, and we held that level for about a year, and once we broke down, it was resistance. So it is back above us, and we've been chopping around that, trying to hold it, but RSI and Stupid Willie are favoring the bears here on the weekly time frame, so keep that in mind. And then let's go back to the 30-minute time frame. So 211 is this dashed red line right here, and then above that, 1 hour 200 moving average has some pretty solid downward momentum. 212 is the top of the implied move for tomorrow. 213 is the top on Friday's contract, and those are big moves. The implied move for tomorrow is 1.19%, and then on Friday 2.29%. So big moves possible tomorrow, but definitely keep an eye on this 1 hour 200 moving average. It looks pretty mean. Above that, we do have the 50-day moving average. That is a really big level, and small caps trading underneath the 50-day moving average, definitely bearish, and the 1 hour actually came underneath the 2 hour, which is another bearish signal on top of the fact that we have downward momentum. So in my opinion, short the pop is the game for IWM tomorrow. Then to the downside, we have that 4 hour 200 moving average. This gap was actually already filled in today, so keep an eye on 206 as a possible support level. It wasn't a clean bounce, but it was still a bounce, so 206 should be on your chart. 204 is the bottom of the implied move. 203 is the bottom of the implied move on Friday's contract, and you could see 203 takes us underneath this, which I'm willing to bet that's the 200-day moving average. And yes, it is. 200-day moving average is just underneath us. That is a huge level. Definitely needs to be on your chart, because if we do drop, even if inflation data is terrible and we drop, that 1-day 200 moving average or 200-day moving average is going to at least give us a technical bounce. It's too big of a level not to. And underneath that, 35 EMA on the weekly time frame. I did zoom out in QQQ to show just how important that level can be. I'm not going to do it here, not tonight. And then just underneath that, we have one more gap. 202 is the bottom of that gap, and that is our first gap, also right above the 1 week 35 EMA, and just off of that big drop that we saw middle of August. So a lot to look for, a lot of dueling momentum moving averages, and small caps do react a little more violently to changes in the inflation numbers. So with RVX at 26, almost 27, should definitely be a fun day here tomorrow. And then lastly, we have DIA. And DIA has the cleanest trading range of everything. It's the only one that is trading above the 50-day moving average. And we are still within the implied move for the week. And the 30-day average volatility is in support of us staying within that implied move tomorrow, which is between 396 and 413. And to the upside, we do have the 30-minute 200 moving average. You could see today we finally got that curled down. So last week we saw that bearish cross down right here. Today we saw that 30-minute 200 moving average as resistance. So we have gone bearish on the 30-minute time frame. And then the top of the implied move for the week is 413. And then underneath us, we have the 1 hour 200 moving average. The 1 hour 200 moving average is still pointing up in the Dow Jones. It is actually pointing down in everything else. So if we do drop tomorrow, I would expect to see a little bit of support. We have that 1 hour 200 moving average. We also have the 50-day moving average. And then underneath that, we do have a bear gap. We have an island bottom gap. So if we do drop tomorrow, the fact that we have these two moving averages above this gap, I would think we see support there. And this island top right here, island bottom, goes back to this down gap right here, which is about the time of Amazon earnings. And then we gapped over it when we did see that squeeze off of those lows in August. So this gap right here, though these gaps normally fill, because of the moving averages above it, I would think that we see this level as support in DIA. And in all the other indices, we have some pretty solid bearish pressure, but in DIA, we're actually just starting to see a little bit of downward momentum here. And that's all I've got for tonight. Have fun, trade safe, make sure you're taking profits when you're up, and I'll see you guys tomorrow.